keep you updated on the capital and financial markets. Here is a recap of what happened. Top global pension market assets lost close to 1/5 of their value year as stocks and bonds were slammed by inflation and interest rate hikes, according to UK insurance brokerage and advisory firm WTW's Thinking Ahead Institute, a non-profit research organisation. Assets of the 22 largest pension markets fell 16.7% year-on-year to $47.9 trillion in 2022. Thinking Ahead Institute says in a statement on the 17th of February. It also notes that these markets allocated less to stocks and bonds and more to non-mainstream assets over the 20 years. Britain set out plans on the 20th of February for a post-Brexit review of its rules for the £11 trillion asset management sector, with a focus on bolstering liquidity after a near meltdown in funds used by pension schemes last September. Until Britain's departure from the European Union in 2020, rules for the UK funds sector were written in Brussels. Brexit means UK regulators can write their own regulations, but the Financial Conduct Authority makes clear in its broad review it will stick to strong international standards, given Britain's global role in asset management. India's SBI Mutual Fund has launched a new fund that will invest predominantly in equities and equity-related instruments of locally listed dividend-yielding companies. The scheme will consider dividend-paying stocks that have paid dividends or repurchased shares in at least one of the previous 3 fiscal years, SBI Mutual Fund says in a statement on the 21st of February. The minimum investment in the fund is 5,000 rupees. The offer period closes on the 6th of March. As the largest fund house in the country, we continue to add to our bouquet of offerings, and we believe this category has an opportunity to grow and find merit in investors' portfolios, SBI Mutual Fund Chief Executive Officer Shamisha Singh says in the statement. Australian Retirement Trust and Commonwealth Bank Group Super plan to merge into a $242.3 billion Australian dollars superannuation fund. Group Super is one of Australia's largest corporate funds, but its $12.3 billion Australian dollars is dwarfed by the $230 billion plus Australian dollars managed by Australian Retirement Trust. They have signed a memorandum of understanding to combine, Group Super says in a statement on the 21st of February. Rosemary Vilgan, chairperson of Group Super's trustee board, acknowledged the fund is relatively small and that even though it has delivered good outcomes for its 67,000 members over the years, scale is important to deliver long-term outcomes. As a large, well-established fund, Australian Retirement Trust can offer a broader range of products and services at competitive fee levels for members. We are confident that a merger would deliver value for our members leading into and during their retirement, she says in the statement. The Monetary Authority of Singapore issued a notice imposing mandatory baseline standards of due diligence and conduct requirements for corporate finance advisors. These requirements raise the standards of conduct of CF advisors, improve the quality of disclosures and allow investors to make informed decisions. CF advisors that assist entities in fundraising from the general public will henceforth be subject to mandatory minimum standards when conducting due diligence on CF transactions. These include conducting background checks and interviews with relevant stakeholders, conducting site visits of prospective issuers' key assets, assessing knowledge, skills and experience of third-party service providers, as well as ensuring that material issues are satisfactorily resolved or clearly disclosed. CF advisors will also have to comply with enhanced requirements to mitigate conflicts of interests, such as where the advisor's related corporations or controlling shareholders also provide services to the same customer. Lim Tuang Lee, Assistant Managing Director of Capital Markets, MAS, said, "Corporate finance advisors, through their work in advising prospective issuers, enable investors to make informed decisions by facilitating adequate and accurate disclosures. They play an important role in safeguarding investor interests and the integrity of our capital markets." This has been the FIMM TV Weekly Recap. Be informed, stay updated. Be sure to like, share and subscribe.